So today's September 3rd, and as a trader, you got to be asking yourself some critical questions going into the most two critical days of, I would say, 2025, looking forward from here. So you've got two most important economic reports based off which Federal Reserve is going to be ultimately making the decision about the September rate cut. So the first job report is the private payroll data, or also known as the ADP report, that's going to come out tomorrow morning, September 4th, 2025. And then the Big Daddy report on September 5th. Now, critical is a few factors here, okay? Number one is the context. Number two is the levels on the chart. You got to respect the levels. You got to respect the levels. You got to respect the context of the charts and the levels of the charts. And also, you got to put some behavioral patterns here into perspective, and that's number three. Also, number four is you got to take into consideration the not what's going to be in the report itself, but rather the reaction of the market to the report. And so if you focus on the first three points on the checklist, is you're going to be able to sort of predict what the fourth one is going to play out like. And ultimately, that's what you need. If you're trading options, that's what you need. You need to understand the size of the move, when to enter the trade, when to get out of the fucking trade. Okay? That's what makes you profitable or not. That's it. It's very simple. But there's a lot of homework that goes behind the scenes, and the question is not simply like, okay, let me just walk you through. So a rookie trader, this is what a rookie trader does. Oh, the report is going to be bad or good, okay? And therefore, if the report is good, we go higher. If the report is bad, we go lower. No, not fucking nowhere close, okay? So if the report is bad, in the current context of the market, right, what is the market doing? All this time, in the last few months, they've been doing what? All the market participants, the Wall Street bullshit. They've been pricing what? The rate cuts. So if the report is good tomorrow, then wouldn't that be negative for the rate cut? And wouldn't that cause some unwind of the position? So it's not like good is good, bad is bad, bad is good. You know, oftentimes you can sort of predict the reaction, okay, but simply understanding the behavioral patterns. But to really, really see what's about to focus and catch the big move, because it's the big move that gets you paid, right? You got to really look at a bunch of charts. And I'm here to tell you that when it comes down to the levels, okay, and specifically, most of you that were bitching about the bounce later in the trading session today on September 3rd, right? I mean, the market just couldn't. I mean, it wouldn't give it to the bulls. It finally gave it some to us as bears. Of course, the top trade today was oil puts, gold calls. Holy shit, since we posted the video on Friday, the podcast I posted, my God, fucking since Friday, gold is up like 160 points. Fuck, if you didn't make 20x on that trade, bro, you guys, fuck, you need to pause the video now and fucking get in touch with us now. Get in touch with the coach. Holy shit. If you didn't make at least 20x on gold, you're doing something that does not make any fucking sense, okay? So with that said, you know, it's not about what gold did. And please, by no means, anybody that's listening to this, don't go buy fucking gold calls tonight. As I'm recording this on September 3rd. I mean, gold calls are so fucking overpriced to the moon. I mean, and sure, gold can... Actually, at the moment I'm recording, gold is finally selling off. It's down like 20 points off today's highs. But still, it's up like 140 fucking points, you know, since Friday. So the point is simple, okay? Don't be chasing the trade that's already up a lot, or don't be chasing the trade that's already down a lot. Just try to figure out, you know, what's going to make the biggest move next, and what is priced in and what is not. So let's focus on the levels right now, guys. Let's review the levels. So the most important observation that you can make as a trader right now, at least to me, that is, if you're looking at charts, just to put some things into context and perspective, like the bird's eye view, okay? If you look at the levels where S&P futures are trading right fucking now, and I'm recording it just post-market close on September 3rd, we're trading, guess at what level? Right fucking now. S&P futures are at 64.67. Okay, 64.67, which is exactly where the market was trading on S&P 500 futures. Guess when? Hey, guys, make a fucking look. Go pull up your fucking charts, damn it. Try to make this an educational experience that's going to get you better as a trader, okay? So if you look at like a 3-month, 6-month chart, you're going to find clearly, especially go to stock charts, pull up $ SPX, pull it up on 3 months, 6 months, you're going to see that we're trading at identical level right now on S&P 500 futures to that of July 31st, 2025. Well, what was July 31st, 2025? That was 1 day ahead of the job report that came out on August 1st. Oh, well, fuck. What's the importance of that, Leo? Well, the importance of that is basically 30 days plus has gone by. What's that, 33 days or so? And a lot of things have transpired since then that would be in favor of a rate cut. Yet, despite of the probability of the rate cut going higher, the market has not been able to clear the level from the prior job report. So on the surface, it could look like, well, hey, if we get a bad job report, which, guys, honestly, between me and you, I think the number tomorrow ain't gonna be fucking pretty, okay? Which technically means that the market should bust out higher, because that would solidify the outcome of Federal Reserve decision, but not so fast, based off the levels and the technicals that I just basically explained to you, that the market's been pricing the rate cut, yet it has not been able to clear the level from 33 days ago, the day before the job report. And for those of you that remember, I mean, some of you made over $1 million between Thursday and Friday, transitioning from the similar setup in July 31st, rolling over to August 1st. Those were the two big red days. And I would argue that we have a high probability of repeating that setup. So I would go as far as placing the trades tomorrow, right? Ultimately, you want to know, well, when do I fucking enter? Leo, just stop all this insanity and trying to explain me all this shit. Just tell me, what the fuck do I do? Where do I place the fucking trade? When do I get in, right? Well, that's why you should trade with a coach. But hey, I'll give you exactly the way we're doing it right now. So, when the market just bounced like an extra 10 points to a level of 64, 67, we started buying a shitload of puts, okay? And the reason is that decision is made based off the technicals. Now, a lot of people will tell you, well, you wait. First, you wait and see what happens, and then you put on the position. Sure, okay? But based off what fucking context exactly are you making that decision? Because based off the charts that I'm looking at, based off the charts that we've been revising all day here at 13 Market Moves with other coaches, okay, we're saying that basically it doesn't matter what the job report number is going to be tomorrow, because the market, honestly, with all them fake fucking reports coming out all the fucking time, they're not going to give a fuck. So the only thing you can do, okay, is try to figure out your answer. You could say, okay, could the initial reaction be higher? Sure, it can be higher. And so if there is a chance that initial reaction to a shitty ADP report could be higher, then what do? Well, you save some funds in your account to short the possible bounce. But you don't wait, oh, well, what's the ADP number going to be? Is it good? Is it bad? Bad goods got nothing to do with, which direction you should be trading on. And unfortunately, that's what most of the traders are going to be focusing on. Now, our strategy is to focus on the context and technicals, which are based off charts and key levels. So considering that 33 days has gone by, we're unable to clear the levels with a lot of data pointing to the fact that, Federal Reserve should cut. And considering what I'd say the biggest giveaway is the bounce that we have gotten late in the trading session today. So if you look at the chart, we were dropping for a couple of hours. Not a whole lot, but we're dropping on S&P futures and NASDAQ and so on. It's the last 45 minutes, right? Took all your fucking gains away for the day. Not on oil, but on S&P, on NASDAQ, on Russell 2000, But the point is, market will bounce up to a technical level, and sometimes it'll just do a little overshoot, just like, yesterday we had an overshoot on oil to 66. Now, the key technical level of oil, the magic level, I call it, is 64.8. Okay, 64.8. And, I've explained that level many times in some other videos, but just yesterday, oil makes a fucking overshoot. So what do? You short it. You don't go, oh my God, well, let me go fucking long here. No, you fucking short oil when it doesn't overshoot. So there is a chance that for a brief moment tomorrow, the market doesn't overshoot. Means it bounces a little bit higher than the current level of 467. Okay? How high can it bounce, Leo? Well, shit. It can go to 60, it can go 20, 30 points higher. It could go 40 fucking points higher. You know what I'm saying? But the probability of that is very, very low. So I don't want to be putting my bets in the direction of the low probability. I want to start stacking my positions in the direction of the higher probability, which I'm basing on the charts. Okay, and guys, I don't have time to cover absolutely every little detail that I'm seeing in the charts here. That's why you should sign up to trade with a third-year market moves coach. Because honestly, I'm not even the best at charts. Fucking Jennifer is the best at charts, So anybody that gets to trade with Jennifer, you're fucking lucky, because she understands that shit better than I do. But the point is this, okay? You gotta, when you view the context and you view the probability of the market not actually focusing on what the real number is and proceeding to the job number tomorrow, the ADP payroll, you got an ugly bear bounce into the close. That is, I would say you start there. It's a bear fucking bounce, A bear bounce into a report is something you should short. Your gut instinct as a short seller, you fucking short that bounce, So, and then you look at, okay, well, what's the probability? How bad can it get? If I'm wrong and the initial reaction is actually going to be higher, what the fuck am I going to do? I'm just going to sit there and lose my ass? No, I'm going to fucking add to my position, because, see, that decision, guys, is made today before the shit happens tomorrow. So when it's happening, I already know ahead of time what the fuck I'm gonna do, okay? I'm not gonna be like a little markets bitch. That's what most of the people do, and that's why they don't make the fucking money in the markets. They're like, oh my God, well, I don't know why, but the fucking, the market is going higher after the ADP report. I must buy calls. No. You don't make that decision by observing the price action, right? And yet that's what most of the people will do. 99% of traders, they're going to do exactly that. Oh my God, the candles are green. I must be buying calls. Fuck no. That's why you don't make any fucking money. I gotta sit your ass down, study the charts ahead of the catalyst, look at the context, and make your decision ahead of time about what the fuck you're gonna do. And then you have a chance of beating the market. So, I've given you a couple of tips here, but like, you know, you also need to figure out like the most important thing when you're trading options is always your expiration and your strikes. Strikes, expiration. And what most people consider risky, which is like buying same-day expiration, I would argue that that is actually the least amount of risk you can take. Because if you studied the charts, if you studied, you know, the levels, if you studied the technicals, if you studied the current market behavior, which, guys, I haven't even gotten to that part, but the point is, the current market behavior is, you know, it's like you get great stocks like, for example, Zscaler. Zscaler announced earnings, and they were great earnings, but guess what? It popped, and what did it do promptly after that? It dropped. Pop and drop. Pop and drop, okay? Bounce, drop. Bounce, drop. Bounce, drop, okay? So you can't be ignoring this sort of behavior in the markets. You know what I'm saying? So if a lot of stocks are doing that, they're making a pop and drop on an earnings report, then, you know, you got to understand, it's a fucking top. And then you look at the key levels on NASDAQ, you look at the key levels on S&P 500, you can see that your RSI is giving you a better divergence. I mean, what else is there to do? Just fucking short it. The only difference is, okay, the way you're entering your trade is, you know, do you enter it before? Do you enter it after? Well, you got to do both. That's my answer. You put half of the position ahead of the report. You put half of the position in case of a bounce. Because what most of the people do, they say, well, I'm just going to wait and see what the report is going to be. And that's how they miss the big fucking trade. Because, okay, like, I would say there is probably an 80% chance when the report comes out, the market's going to just fucking go straight the fuck down. Okay, but you also got to know by how much, okay, in order to get a strike that's actually going to put you in the money by at some point in the trading session. So, I mean, all of these things, guys, they have to be decided ahead of time, but then you got to be there and execute it in real life when it's actually happening. And that's where majority of the traders, they just freeze up. They freeze up. They're like, oh my God, it's bouncing. I know I was thinking about buying puts, but oh my God, I can't do it now. It looks so green. Oh shit. That's exactly the moment. Like, do you guys understand that oil puts, like on CL, there was a moment in the day when oil just, it dropped, and then it fucking bounced like from 63.9 to 64.8. And you know, if you looked at it, it was just like, oh my God, something is happening. Somebody fucking knows something about oil. They're buying the fuck out of it. Man, stop the bullshit. Guess what we did? On that bounce, we're shorting the fuck out of oil. And if you got a good feel, guys, you went 10x within 90 minutes. Within 90 minutes, you went 10x, because as soon as that shit shoots up to 64.8, okay, 90 minutes later, it's at 63.8. So if you were buying oil puts like 64.5 strike, 64.25 strike, 64 strike, I mean, they went super profitable, especially if you got lucky on your field when the shit was shooting up and you bought it for pennies on the dollar. So what I'm saying is, your decision about whether you're bearish or bullish on something and how you're going to trade it, that decision is made ahead of time. So when something unexpected like this comes up on oil, you're not sitting there trying to go look up the news. Oh my God, what's happening with oil? Why is it fucking pumping all of a sudden like crazy? Oh, you're like, oh my God, it's pumping. Fuck yeah, hallelujah. I'm fucking buying puts, damn it. You know, like that decision, you know, it's within seconds, but you gotta make it. You can't sit there and fucking doubt yourself. Oh my God, oil is pumping. Should I close all my puts and I should be buying calls? No, fuck no. I'm gonna fucking go and put a shitload more money in oil puts. That's like, and unfortunately, most of the traders, they just don't fucking know what to do in such a situation, you know? So calculate your levels. I told you the magic level in oil 64.8. Okay? Once it breaks below that, it's gonna fucking go lower and lower and lower for a number of days. Okay, so chances that oil is gonna drop another $1, $2 tomorrow, a few more dollars. Like chances by Monday oil is gonna be at 56, 57 is like at above 80%, you know? And yet, if you look at the price action and the green candles, midday today, you're like, oh my God, it's so bullish. No, fuck no, it's not bullish, okay? It's not, it's only bullish to those who don't do their fucking homework. That's what I'm saying. So do your homework, and if you're busy running multiple businesses, or, you know, if you're busy at work, or, you know, you don't have time to, that's why you come and you trade with 13 Market Moves. You guys know how to get in touch with us, but the point is, I've got ideal strikes for tomorrow. I've got ideal expirations. Now, by the way, not all of them are tomorrow expiration. You may be thinking after listening to this, oh my God, what else? All he does is buy same day expiration. Hell no. Okay, there are instances in the market where you could identify that a market is going to move consecutively lower by more than 2 or 3 days. And so in that instance, your biggest trade is not necessarily going to be buying same day expiration. It's going to be buying, you know, a few days out on expiration. But ultimately, your biggest moment where you're going to go 10x, 20x is going to be when that reversal takes place. So to summarize all the shit I've basically just told you is, you don't want to wait till the bounce comes. You want to put in your position at the current level. And I'm not looking at your charts right now, but the last time I was looking at charts, we were at 64, 67. So, I mean, by the time you look at it, I mean, fuck, I don't know. We may be at 64.75. We may be at 64.80. Well, great. I mean, we may be at 64.62. Also great. The point is, that's the level from where we sold off in a big way on July 31st, August 1st. And I think we're about to repeat that setup, guys. So to me, when I look at the technicals, I don't have to think about this shit twice. You know, big ass fucking position ahead of the ADP report tomorrow. And just in case I'm temporarily off and the market is going to bounce, guess what I'm going to be doing? I'm not going to be sitting there, oh my God, well, let me change my view on the market, because guess what? The temporary reaction is higher. I must have gotten this shit wrong. Fuck no. There's zero chance of me fucking doing it. I'm going to sit there and execute like fucking ninja, okay? I'm going to fucking beat the market tomorrow no matter fucking what. So if it bounces, I'm going to short it, okay? With various expirations, okay? With various strikes. So I could miss it by a day, sure. But I ain't going to miss it by 2 or 3 or 4 fucking days. So either way, here at 13 Market Moves, we're looking at a huge payout. You know, and we're fully prepared to whatever fucking happens tomorrow. We're fucking ready for it. The question is, are you fucking ready for it? So, wake up early. Get off your ass. Okay? Get in touch with the coach. And be ready to make your fucking $1 million in the next 5 days. It's about time you fucking did it. So, get in touch with us and make this shit happen this time around.